I think most of us can agree that if we were given the option between receiving dividends on a monthly basis as opposed to a quarterly basis, most of us would probably prefer getting distributions monthly. It really doesn't help any faster in terms of reinvesting the dividends and creating a snowball effect, but I think it has more of a psychological effect to it. It definitely helps in terms of staying motivated if you're trying to accumulate a large holding in some of your favorite dividend stocks, or if you're living off your dividend distributions, then it obviously helps you budget more effectively than living off quarterly dividend distributions. In today's video, we're going to be taking a look at a high-yielding dividend stock that recently just did something pretty rare, which is they decided to switch their distribution schedule from paying shareholders quarterly to instead paying investors on a monthly basis. On top of that, this also resulted in the company issuing a slight dividend increase too. What's also great is that this company currently yields more than 9%, and according to their balance sheet, this stock is also currently undervalued when compared to their current trading price. The stock we're taking a look at today is SLR Investment Corporation, ticker symbol SLRC. SLR is a business development company specializing in secured debt, subordinated debt, growth capital, and strategic income-oriented control equity investments in middle-market companies. The company invests in a wide range of different industries, including aerospace and defense, air freight, cargo transport, automotive, and asset management, among many others. SLR likes to invest between $5 million and $100 million into each transaction they commit to. SLR also only usually commits for 3 years whenever they make an investment. Currently trading at $17.87 per share, SLR Investment Corporation offers a dividend yield of 9.18% according to Yahoo Finance. They just announced their first monthly dividend of 13.67 cents per share, and it's scheduled to pay out their first monthly dividend to investors on May 3rd. The company did reduce their dividend once, but it occurred all the way back in 2013, which was nearly 9 years ago. Since then, there hasn't been any additional cuts to their dividends, which is good. The last time SLR increased their dividend was back in 2018, and it was also by only 1 penny. So while the stock doesn't offer a whole lot of dividend growth, it does still manage to pay an exceptionally high monthly dividend if you're currently seeking some high income in your portfolio, either to live off of or build up a dividend snowball. One reason why SLR Investment Corporation is now paying monthly dividends has to do with a recent merger that just took place. SLR Investment Corporation was just recently combined with SLR Senior Investment Corporation, which was an entirely different BDC that was publicly traded under the ticker symbol SUNS. The merger was approved by shareholders last December, and we're now seeing the results of that transaction. According to a press release, the new SLR Investment Corporation now has over $2 billion worth of assets and has investments in 125 different companies. According to SLR, they hope that the merger between the two companies will result in improved access to lower-cost sources of debt capital. They also hope that when combined, it'll result in improved trading liquidity, and the combined company stock will be more attractive to institutional investors, which could potentially lead to broader equity research coverage. Plus, combining the companies will result in further diversification of their holdings, since it'll be one large company with a lot of different holdings versus two separate entities with a handful of businesses in their portfolios. SLR Investment Corporation isn't exactly like your typical business development company. Most BDCs like Ares Capital or Owl Rock Capital provide financing to companies who are either looking to expand their business or they're investing in companies that are looking to restructure themselves and basically need financial assistance in order to keep themselves in operation. But while SLR does make these kinds of investments, one large part of their business is their asset financing division. So instead of providing just general capital to these companies, what SLR will sometimes do is only provide financing for a specific company asset. For example, SLR may provide a company with financing they need in order to acquire one specific or maybe a few specific large and expensive assets that SLR believes will help the business expand their operations. So this could be anything from a construction company needing the money to buy new heavy machinery, or it could be a shipping company looking for funding for a new marine vessel, or even a forestry business wanting to acquire a new Cessna that'll help them. So instead of just giving a company a $10 million check and saying, here you go, use it as you see fit, SLR instead wants to focus on where exactly all their funding is going into for a company. As of September of 2021, SLRC's investment portfolio is made up of 100% secured investments, with 92.1% being senior secured. This is much higher than your typical BDC from my observation, and SUNS, on the other hand, has an investment portfolio that's made up of 100% senior debt and 100% senior secured debt, which is pretty stellar in my opinion. When the two organizations are combined, roughly 29% of their investments are overlapped into each company. This means that before the merger, 29% of these businesses were receiving funding from both SLR Investment Corporation and SLR Senior Investment Corporation. With that being said, I can understand why a merger looked so attractive given how much overlap there already was. When broken down, we can see 26.1% of their investment portfolio is made up of life science companies. According to their website, SLR invests in later-stage drug and medical device development, diagnostic, healthcare IT, and healthcare service companies. These types of investments are typically considered higher risk, higher reward kind of scenarios. 26.4% of their investment portfolio is in what they call cash flow, or from what I could gather, this is the part of their portfolio that's made up of more traditional BDC investments. So this represents the companies they invest in that'll use the funds for capital growth, leveraged buyouts, acquisitions, and some other uses companies would go to a BDC for financing for. When looking at the metrics for this company, one thing to keep in mind is that SLR's senior secured loans are floating rate loans. This means that as the feds raise interest rates, SLR will receive higher interest payments from their borrowers, thus they stand to benefit from rising interest rates. Furthermore, if we look at the balance sheet, their book value from last quarter is $19.93 per share. Because SLRC is currently trading at $17.87 per share, the company is currently trading at a discount to their book value, in part thanks to the help from that merger with SUNS. In terms of stock price performance over the years, we can see that since the company's IPO in 2010, their stock price is down about 55 cents, or roughly 2.99%. SLRC is also down about 3.72% from this time a year ago, so not exactly great news, but this also doesn't take dividends into consideration. This is strictly looking at just share price performance. If we did look at the performance of a $10,000 investment back when this company first launched, we can see that it would have left you with an overall return of 202.63% had you chosen to reinvest all your dividends. If you would have kept the money, you'd still be looking at 123.22% overall return on your investment. With dividends reinvested, your average annual return would have come out to 9.52% and would leave you with an ending balance of $30,273.49. With 1,693 shares of SLRC, that means that at 13.67 cents per share in monthly dividends, you'd be collecting roughly $231 a month in dividends from this stock. That's a pretty decent amount from a one-time investment of $10,000, and if you never invested another dollar into SLRC and just let the snowball effect take route. So to summarize everything we've just looked at, I think SLR Investment Corporation is a pretty decent pick for a BDC. It's not one of my favorites in this sector, but I think it's a pretty average stock. The share price performance isn't exactly great when compared to other BDCs like Ares Capital or Pennant Park Floating Rate Capital, but on the other hand, these BDCs either don't provide monthly dividends or they don't provide a dividend yield quite as high. I'm believing that as interest rates rise, this is something that should be good for the company. Since all their loans are floating rate, they should benefit from the additional income from these investments. If you're looking for an investment in order to live off of the dividends, I think SLRC is a pretty decent pick and at least worth considering maybe a small part of an income portfolio. I'm definitely curious to see how this BDC is going to perform after some time has passed after this merger. But as always, be sure to perform your own due diligence and research before investing, and remember to diversify your portfolio across different holdings and sectors in order to reduce the amount of risk you're exposed to. Alright everyone, that's going to wrap up today's video. Thank you all so much for watching, I really do appreciate it. If this video benefited you in any sort of way, please click the like button below, and click subscribe if you want to see more dividend investing strategy videos. It would just let me know that there's a sizable enough audience out there who wants this kind of content, and I'll continue to provide you all with that content. Alright everyone, thanks again for watching, and I'll catch you next time. Take care.